if you want to start recording. There we go. And you will see a little pop-up on your screen. All right, so today's speaker is Kennedy Thayer from Jewish Family Service. And Kennedy, if you're ready, go right ahead.
Awesome. Thank you so much, Daisy. Hello, everyone, and welcome to the Dallas Public Library seminar partnered with the Jewish Family Service of Greater Dallas. My name is Kennedy Thayer, and I am a financial coach with Jewish Family Service. And so with that said, a lot of people are not going to know what that is. And so trust and believe I will help you out and help you understand what that means and how that can be beneficial for you. So hopefully everyone can see my slide. So I am a part of a team, the Career and Financial Services. So I'm part of the financial aspects, but we also have career coaching as well. So financial and career coaching and a bunch of other services. So today we're going to be talking about surprising and easy tips to improve your financial future. So to start off with that, I mentioned that I was a financial coach. What does that mean? What does a financial coach do? So a financial coach is not synonymous with a financial advisor or a financial planner. We are completely different. And so financial coaching is not going to be a transfer of information regarding finances. I'm not here to tell anyone, hey, invest in this stock, or hey, let's put your money here. That's not what I'm going to do. It's about creating a financial goal supported by behavioral change. So there's definitely have to be a changing piece in that. So financial coaching, the kind of goals that we work on is understanding what wage and salary needs. If you're looking for a job, how much do you need to make? Do you know this? How much did you make at your past job? Was it enough? Are we looking for a little bit more? Since we live in Dallas, things are a little bit more expensive. So it's going to be a lot different than if you move from a smaller city. And so understanding that. Also, if you have any debt, how to reduce it. Would you like to pay your debt down with the least amount of interest possible? It sounds pretty good. Americans pay about $904 in interest yearly. That's a lot of money. Do you want to be one of those people, or do you want to help reduce your debt and pay less interest in the end? Sounds like a great idea. So that's something we can help you out with too. Also, if you haven't checked your credit report in a while or your credit score, we can help you understand your credit report. We can also help you improve your credit score. If your credit score isn't 850, then it's not perfect, and there's something to work on for sure. So also a spending plan. A spending plan is a great word for a budget. So they're very synonymous. And so spending plan is, where's your money going every month? Where is it going to? Is it going to bills? Is it going to eating out? Where's your money being spent? So that's why it's called a spending plan, because budgeting sounds to me very constricting. And so that's why I love the word spending plan. Also, do you have a savings? Do you have an emergency savings? Things like COVID happen. Unfortunately, they do. There are medical expenses that can come up. There are car expenses that can come up. So many different things. It's really important to have 3 to 6 months in rainy day funds. And so if you don't have that, that's something a financial coach can help you with. Also, retirement savings. Do you have retirement savings? What's that going to look like when you retire? Understanding how to plan for that. And also understanding your financial behaviors. Am I a spender? Am I a worrier? Do I have some debt that I want to work on? Am I an impulsive buyer? Understanding what type of person you are and where does that come from? Does that come from growing up? Does that come from having money and now not? Kind of understanding a little bit about you, because financial coaching is 100% personalized on your situation. It's not a blanket for everyone. It's not going to be, oh, everyone needs to follow these tools. Everyone is individualized into their own plans and their own goals. That's what financial coaching is. So, coaching in general is to achieve client-defined goals. Just to break down coaching, because we talked about financial, and y'all might not know what coaching is. So a client defined goal, you all would be the client and saying, okay, what do I want to work on? And what does this mean for me? What are my values? Do I want to buy a home? Do I want to buy a car? All those types of things. What does that look like for you? What's your timeline? How much money do you want to spend? All that is based on you. And that's what I mean by your defined, client defined goals. Also addressing immediate issues. It's super, super important to have priority goals. It's important to understand, what do I really need to work on right here and now? Because something that I might think is immediate may not be the same definition for you. So what is immediate for you? What's your priority? And also understanding how to support specific actions to meet your goals. So if I want to buy a house, what do I need to do to support this goal? So what are the actions I need to do for that? Do I need to save money? Do I need to talk to a loan officer? All those different types of things. What are the steps we have to accomplish before we buy that house? And improving financial situations. You can always improve. Everyone, no matter how much money you have, always has a financial goal. So don't think that, oh, the people who are millionaires, they're fine, they have no financial issues. There's always something to work on. And change in financial behaviors. Everyone has habits that they don't like that they do. So a habit takes about 66 days to change. And if there's a habit that you want to change, saying, I eat out a lot because I don't want to do the dishes, makes sense. I mean, that's pretty valid. But how can we still eat out and also be able to kind of do the dishes, and ability to spend the money, but also eat at home and eat healthier, because it's not very healthy to eat out. So with that said, financial coaching, we can help you facilitate decision making. If you're indecisive, is that the type of person you are? That's okay. That's something we can help you out with and help you understand how to make that decision and be confident in that decision. And we can help you make pros and cons, understand what the difference is between two situations. So the nature of a coaching relationship is going to be trusting and collaborative. So as a coach, I want you to feel like you can trust me and that you can work with me, because we're working together to accomplish your goals, not my own goals. And so it's something that we're going to have to talk about, and we're not going to just start a session off going right into the nitty-gritty finances, because that's scary. Finances are super, super hard to talk about. So I don't want you to think that it's going to be a scary situation, especially due to COVID. It's been very difficult for a lot of clients. So it's something that we're going to have to talk about, how you're doing and how the job search is doing as well. And the client is a source and the director of change. So with that said, with coaching, a lot of people will be like, it's been 3 months I've been working with these coaches. What's going on? Why has nothing changed? And they may want to blame the coach. And a lot of times it's your life, it's your decision. If you would like to work with the coaches and put your full effort in it, that's when you're going to see the change. And that's when you're going to see things happen. You're going to see people calling you for job offers. They're going to see your savings increase, but it starts with you and it has to end with you. We're just here to be that accountability partner. So here's some awesome statistics that I just want everyone to just start thinking about, saying, is this me? So on average in 2018, 61% of American households say that they would pay for an unexpected $400 with cash, savings, or a credit card. So $400, that seems like a lot, but that could happen very easily. You have a car expense. What would you do if you had a car expense? Think about your financial situation. How could we get ready for that? This is something that as a financial coach, we could help you budget for this. Also, 18% of workers earning a salary greater than 100K are still living paycheck to paycheck. This goes to the point of me saying even people who earn a lot of money still have financial goals. and still have things they need to work on. So it's not just regular people with the median income, it's everyone. So don't feel like it's just you. And as of July of 2019, 28% of US adults had zero emergency savings. That's huge. It may not seem like a lot, but to have zero emergency savings, starting to think about what are those people going to do? Are they going to use their credit cards and start to have to pay a lot of interest on that? Are they going to take out a predatory loan with super high interest rates? What would they do? And so that's something to think about. Also, 59% of adults in the US are living paycheck to paycheck. That's more than half. And so we already saw the 18% of the 100K workers are doing that. That's 59% of everyone who's living paycheck to paycheck. That's a lot of people. And so that's something financial coaching, we can help you out by saying, how much do you need to make? Kind of negotiating that salary, understanding what salary you do need to make to become financially stable and to stay that way. Because while you're looking for a job, you don't want to start thinking, oh, I just need a job as soon as possible and take any offer. You have to be able to stand up for yourself and know how much you need to make. And that's completely okay. So that's why you talk to a career coach and a financial coach, so that it's more of a holistic approach, so that you understand this is my financial picture and this is my career picture. Goes hand in hand. So here's some awesome statistics about financial coaching clients and how great they've done. So financial coaching clients have increased their positive disposable income by $422 per month on average. That's huge. We just talked about how $400 of an unexpected expense could happen very easily. So with financial coaching, we've seen these statistics. It's very beneficial. Also, 618 financial coaching clients were able to reduce their debt by a cumulative of $3 million. That's a lot of money. These are some things that we can help you work on with a debt reduction plan to try to pay the least amount of interest possible. And wages of households increased by 1.3 million per month with the help of financial coaching. So these are all some awesome statistics of what could happen if you work with a financial coach. So there's a lot of benefits. And here's some more pros of working with a financial coach. We can help you see the bigger picture of how you specifically relate to money. We can help you develop better habits and result in positive personal growth. Why not want to grow your personal spending plan and understand your financial behaviors? Why not? Also, we can help you provide education and encouragement. We're definitely going to be here to be your little cheerleader and coaching you along the way, saying you are doing awesome. And so it can help you reduce financial stress, because let's say you're in a job and you're underpaid and you're sitting there thinking, oh, I need a better job. That's really stressful, trying to look at other jobs who pay maybe $1 or so more. We'll help you understand how much you actually need to pay so that you're not feeling that stress. Because it's hard to sit at work when you're feeling all that stress, and if you have a spouse, your marriage could be affected. It's a very stressful time, and that's something that financial coach can help you with. There is also an accountability piece. So understanding that you'll have to be accountable, and I can be that accountability partner for you if that's what you need, saying, oh, I didn't make my goal of my fast food budget. That's okay. That's something we'll continue to work on. So I can be that for you. Also, Jewish Family Service has certified financial and career coaches. We are certified. We've been through training. And a lot of the times, financial coaching can be expensive. However, at JFS, it's free. So it's a great program. Why not try to learn something? And the career coaching is based on your ability to pay. So it's a sliding scale. The only cons that I would say are working with a financial coach is that you are ultimately responsible for your success. And that can be very difficult to hear, and it can be easy to blame the coach if you don't see any improvements. It can be easy to say, oh, this is her fault, or It can be easy to do that, but understanding that this is your situation and we're just here to help. And we can also, coaches can't provide recommendations like a financial planner or financial advisor. We're not here to tell you, oh, do this. And so that might make it difficult for you. So understanding if a financial coach is right for you. Okay, so here's what we're going to do in a financial coaching session. Here's just some ideas. So we're going to set a SMART goal. Some of y'all have maybe heard of the acronym SMART. So it stands for specific, measurable, attainable / action-oriented, either or, realistic, and time-bound. So there's an awesome example, and this is the kind of goals that will help you set. So let's say we want to save, and this says specific. How much do you want to save? This person wants to save $2,400. Measurable. I'll put away $100 a month to be able to turn it into a savings account. Okay, so that's measuring how much you can put away monthly. That's awesome. Is it attainable? So how can you do this? I can decrease my takeout by $100 and eat at home. I can meal prep. And these are some of the things a financial coach can kind of talk to you about is how can we put $100 a month away? Can we talk to your cable provider? Can we call your credit card company to change your interest rate? That's something you can do. These are the kind of little tidbits that financial coaches know that we can help you out with. And realistic. Is it a realistic goal? So if you have $50 automatically deposited in my savings account, I won't have to do it myself and it'll make it easier so I don't forget. And time bound. So how long is this going to take you so that we have a specific amount? Okay, 2 years? Great. So we can keep checking on that each month. A financial coach will say, hey, how's this goal going of yours? Okay, if it's not going well, let's talk about it. This is something we'll do in a session. This is also something we'll do in a session is talk about goals. So it is a new year. We're in January, almost February. So new year, new you. What are your goals? If you don't think you have any financial goals, you're like, oh, I'm fine. I'm 100% fine. I don't need financial coaching. Do you have a savings account? Do you have a Roth IRA? Do you have an IRA? What do you have? If not, is your savings account working for you? Are you earning interest on it monthly? Is that something you want to do? Make money off your money? It's a great idea. Do you have 3 to 6 months of expenses in your savings account for a rainy day? Is your credit score 850? If not, it can always be better. Do you have any debt? And would you like to become financially stable and not worry about your financial situation? Or even have those conversations with your spouse about, ooh, should we really buy this? Wouldn't you like to be carefree? This is what financial coaching is. So here's this awesome, awesome method. We will also budget or make a spending plan, those 2 words that I talked about. And so with a budget, this is a great thing that I like to call the 50-30-20 method. So while we're looking at your budget, or while you're looking at it yourself, decide, is 50% of my budget going to needs? Is it going to housing, transportation, insurance, groceries, all the things we have to spend our money on monthly? These are our needs, or also your baseline. Is 30% going towards wants? So you're allowed to have wants. Financial coaching, I'm not here to tell you, don't ever eat out, cut your cable. That's not what I'm here to tell you. It's very, very important to have wants. Going and having fun, it's really important for your mental health. Getting a takeout dinner, making your home feel like a home, having those new throw pillows that are on there. And 20% goes to your financial future, whether that's paying down debt so that you have more availability on your credit card and building up your savings. So this is the 50-30-20 method. And this is something we will do in a financial coaching session is understand, is this what your budget looks like? If not, let's help it look like that. If you don't want it to look like that, that's okay too. If you would rather 30% go to financial future and 20% go to wants, awesome. Because like I said, financial coaching is what you want to do, not what I think is best. So I did talk a little bit about wage positioning and understanding how much you need to make to feel financially stable. This is something we'll do in a session as well. So I'm going to give you a little snippet of what it will look like. Understanding what will you need to pay your expenses. So looking at that budget or spending plan. And what do you want in the future? What would you like to accomplish in the future? So kind of understanding, in the past, I've been paid 50K and I know that that's okay. And in the future, I would like, 80K. That's a good idea. And these are just examples. So this is just something, and that's okay to have a range. And then somewhere in the middle is where you might want to meet. And because you don't want to set yourself off for 50K, if that's what you made in the past, your finances may be different now, especially since you have different goals and there may be different things that you're working on. And maybe 50K wasn't enough. Maybe your spouse got a new job and isn't making as much. There are a whole different other factors of why it's really important to have that range. Also, understanding, what does the company pay? If you're going in for an interview, knowing it's a nonprofit, you can kind of decide, okay, this company isn't going to pay me 100K. I know that. So going on Glassdoor, PayScale, salary.com, and understanding what they pay normally for these types of positions. And so having that knowledge, and then you can talk to a career coach and say, hey, how do I have this conversation with a potential employer? That's why career and financial, we work together. So what does this have to do with career coaching? All of y'all came onto this call thinking, okay, we're going to talk about job search, but why is this lady talking about finances? So they go hand in hand. We want you to be employed and stay employed. If you are not financially stable, it makes it difficult to stay employed somewhere. If you don't feel appreciated by the amount of money you're making, it's harder to stay in that job or not to look for other jobs. So we want you to stay employed. And with that, you have to be financially stable and like the place you're working at, of course. So negotiation, what is your number? We just figured that out. We figured out the range. What do they pay? You go to Glassdoor, and when to give in and when to walk away. Sometimes you may need a bridge job, which is a job that you need for, it may not be your ideal career, but it's something because you need money, and that's okay. But if you're unable, if you really would like to make sure that you are financially stable, understanding how much you need to make and saying, let's negotiate. And that's a great conversation for a career coach as well. So another super, super important thing about job search is your employer will check your credit report. I hope you all knew this. It's very, very important to check your credit report because it can affect your job search. So I do want to let you know a few things. They will not see your credit score. So they are not going to see what score you have. So don't worry about that. They just see a little snippet of your report and what it looks like. So it's really important to understand what is on that report. What is a credit check? This is what they're going to do. Employers are going to pull it and they're going to see the identifying information, your name, address, your social security number, your date of birth, past employers, all your past phone numbers and past addresses. And that's okay. Credit accounts, this is what they'll see. They'll see the type of accounts. If you have credit cards, mortgages, auto loans, they'll see when they were opened, the credit limit or loan amount. And they will also see the balance and payment history. So it's really important to understand what is on your credit report. And credit inquiries, there's two types. There's hard and soft. So when employers are pulling your credit report, that's going to be a soft pull. When you receive those promotional credit cards in the mail that says, oh, you're pre-approved, this is a soft pull. However, when you apply for a mortgage or when you apply for a credit card, any lending decisions, those are going to be hard pulls. And public records and collections will be on your credit report. So if you have any bankruptcies, any bills that have gone to collections, like utility bills, credit cards, or cell phone bills, this is why it's really important for you to check your to check your credit report is because I've seen clients who have had things on their collections that aren't even theirs, and we can dispute this. And this is something I can help you do. So, what to know about an employer credit check? They have to get written approval to pull a credit report. You cannot just pull a credit report because they know your name. You have to agree to this. And so be sure to read whatever they send you. Most likely it'll be on the application. And when you sign that, that is signing that you're allowing them to pull your credit report. So it is part of the overall background check in the hiring process. This is something that they do. So don't think that this is very random. This is very normal. And like I said, the employer does not see your credit score. So do not be afraid about that. And it also, the reason why they do this is it may indicate responsibility of a potential employee. So if you have a bankruptcy on your credit report, if you have collection accounts, if you're late on your mortgage, they can see this and say, this person may not be financially responsible. So how can I be sure that they'll be responsible in this job? Or if they're not, or if they are financially responsible and they're great in a job, then what should I do? And so it's something that they can kind of determine what kind of person you are with your credit report. So how to prepare for a credit check. So this is something you can do all on your own. So you can pull your credit report at annualcreditreport.com for free. So you are able to pull your credit reports, which are 3 of them because there are 3 different credit reporting agencies, Experian, TransUnion, and Equifax. You can pull all 3 reports once a year. So that's 3 reports, 1 time a year. So what I like to do with clients is have them pull maybe 1 in January, maybe 1 in March or in June, and really depends. And so kind of spread them out. They should all be very similar. Sometimes it's okay for them to have some different things, and that's completely okay. They're also going to have different scores. That's 100% okay too. Credit Karma. I love Credit Karma. It's awesome. It will give you your Experian and your TransUnion score. So with that said, or your Equifax and your TransUnion score, Experian you can get on credit.com. So those 2, it'll give you those credit scores, which are not the same as a FICO score. And I will explain that. So, and it is free. It is also a soft pull, which is really important, and it will not impact your credit score to use. That is a myth that checking your credit score will impact it. So please do not think that. And so it's really important to work with a financial coach to understand your credit report and to correct your errors so that you can raise your credit score. So I talked about the FICO score. How you receive your FICO score is when you have a big bank, let's say Wells Fargo, let's say BB&T, any banks that you have that's a pretty large bank will most likely give you your credit score monthly. You do have to enroll in that, and that's something I can help you do as well. So this is how your credit score is calculated. 35% is payment history. Are you paying on time? 30% are amounts owed. How much debt do you have? 15% is the length of credit history. It is really important to have credit history. And so I know it's only 15%, but it's really important. And 10% is new credit. Did you just open up a credit card? How is it going? Did they approve you? Is this the first time you've applied for this credit card? And 10% is types of credit. FICO score likes to see that you have a different amount of types of credit. So they like to see that you have a mortgage. They like to see that you have an auto loan. They like to see you have a credit card and maybe a store credit card. They like to see those different types of accounts, and that's okay. So it's okay to have some debt, and there is some good debt and there's bad debt. And that's something a financial coach can kind of help you understand a little bit. So with that said, I'm going to open it up to some questions and comments. I just want to thank you all so much for attending this seminar. And kind of hoping that you can learn something. Your success is our objective. And so JFS has so many different things that we can help you out with. We have mental health, we have food pantry, we have career and financial services, like I said. So let me know if you have any questions. I just saw a question in the chat from Denise. It said, what is the length of a time a client can be in the program? This is an awesome question. Thank you so, so much. So there's no length of time. Clients can come back, they can stop the program, they can be here for 10 years. Ideally, that's not what we want. We want you to, there's an end to a coaching relationship. We want you to reach that end and to be able to feel financially stable and get that job. And so it really, there is no length. It's how long you can be in the program. Thank you so much. And looks like there's another question. Thank you, Denise. Are most clients successful in reducing their debt and increasing their cash flow? Yes, depending on the client and their want to improve this. If you, let's say you're a client and you decide to start our program and you decide to talk about, oh, I want to decrease debt, but I don't know how. And if you don't put any actions towards achieving this goal, no, you're not going to be successful. But if you are motivated and you want to achieve this goal, then yes, you will definitely see a change, and we can help you provide those tools. So yes, a lot of clients who really want to achieve these goals are successful. So there's another question from Hannah. Can you briefly talk about the difference between good and bad debt? Yes, thank you so, so much. So if all of y'all know Dave Ramsey, so he talks about debt and how it is bad. And there is this looming thing out there that says debt is bad. However, it is not. Debt is not bad. It is completely okay to have debt because you can't have credit without having debt. So with that said, you have to open up a credit card and pay on that credit card. And so that means you have to spend money on it, which is debt, to be able to increase your credit score. To buy a home will help you get good credit, and it'll also be an awesome place to feel comfortable in. And so that would be debt as well. And that's completely okay. There's nothing wrong with having a home or having a mortgage loan or even an auto loan. No one, very, very few amount of people, I won't say no one, are able to just drop 30K or more on a car. And so it's super important to use an auto loan if you need that. And so that's the difference between good and bad debt. A bad debt may be if you have a collection account, or if you have a predatory loan with a super, super high interest rate. That's bad debt, because those interest rates are so high that you're going to be paying on that. And in the end, you're paying a lot on interest. So I hope that answers your question, Hannah. So Molly Fitzke said, how long does bad debt stay on your report? This is an awesome question. Thank you so much. So it really does depend on the state. So here in Texas, about 7 years. There are some states where it's 5 years and some states that it's 10. So please check your state. But for Texas, I know it is 7. So it's really important. Bankruptcy is 7 to 10 years, depending on the type. And then Keely said, hello, earlier you talked about an emergency fund. What would be an appropriate amount for an emergency fund? This is an awesome question. And so I can't say that there is just one amount, because like I said, everything is going to be individualized. There is no set amount. So 3 to 6 months of your budget. So let's say you spend about $3,000 monthly, just throwing a number out there. You should want $3,000 for each month. So that would be $9,000 for 3 months, just to have saved up for a rainy day. So if you lose a job, you have 3 months to be able to live on those expenses. But like I said, it's 3 to 6 months. So the more you can do, the better it'll be and the lot easier it'll be. And then John, yes, I saw your question. What about credit cards you keep a zero balance on but not use? Love this question. So one thing that I do want to let you all know is that do not close a credit card, because credit cards are seen as an asset. So if you have, let's say you have 2 credit cards, they both have $5,000 limits on them. That's $10,000 that you're able to use. Those are an asset to you. So if let's say you keep a 0 balance on, that's okay. Make sure this credit card does not close. So maybe you might want to put $20 for gas here and there just to keep that credit card open and pay on that. You can pay it day of, you can pay at the end of the month, that's okay. Make sure it doesn't close, because that $5,000, if that goes away, then you only have $5,000 and your credit score might go down. So super, super important to know this. Do not let your credit card go down by letting a credit card, or do not let your credit score go down by closing a credit card. So super, super important. I hope that answers your question. And oh, Daisy, awesome. What are some suggestions for improving a credit score? This is a great one. So we talked about that pie chart. So some suggestions for improving a credit score. Here's a few things. You can ask your credit card company to lower your interest rate. Yes, you can ask them. Even pre-COVID, this has been something that has been here forever. So what you can do is ask them to lower your interest. If you lower your interest, you're paying the least amount, you're paying a less amount, which is super important. Also, pay a little bit more than the minimum. Having a lower balance is really important to having a higher credit score, because having that utilization, so credit utilization, is also an impact on your credit score. So if you're using less than 10% of your utilization, that's where you would like to be ideally. So that's a suggestion. There is something called, so what it is it's a lending circle. And so what it is there's one, it's called Mission Asset Fund. It's here in Dallas. And what they do is we have 6 to 12 people. They get in a circle. It's run by a nonprofit. It's 100% safe. And what they do is they lend money to each other. And this nonprofit tells the credit bureaus, Equifax, TransUnion, and Experian, and says, hey, these people are lending money. They're doing a great job. And that's seen as a lending decision. And so it increases your credit score and you get the money back. This is an awesome, awesome tool. I love lending circles. There's so many different ways to increase your credit score. Also checking your credit report to make sure there's no collections. Very, very important. Do I get a credit score on my credit card if I keep a 0 balance before the due date? So I'm a little confused about this question. You will have a credit score. Everyone has a credit score if you have credit. And so it's between 300 and 850. And so with that credit score, even if you keep a 0 balance, you can still increase your credit score. I do think it's important. You do have to spend a little bit just to be able to kind of show that you're paying off, because they want to see that you're paying on something. So if that's your question of how to increase it by, so yes, you do have to put a little bit of money to increase that score, but yes, you can still, you still get a credit score if you have a 0 balance. I hope that answers your question. And Donna, yes, I will come to Michigan for sure. I would love that. Any other questions? Y'all can unmute yourself, put it in the chat box, whatever is easiest for you. Awesome. Y'all had some amazing questions. Thank you so, so much. Here's what, I'm going to share this last slide. Then I do see that last question here. This is just our intake line. I know it was in the chat, but there's just so many different types of questions. Hannah said, any suggestion for student debt versus credit card debt? So I don't know what you mean with this in terms of suggestions. We do have a lot of student loan help, and so helping people pay down their student loans. Suggestions for credit card debt, yes. There's a lot of times you can get loan consolidation where you lump all your credit card debt into one. There's student loan consolidation, and I can help kind of talk about the pros and cons in an individual session, depending if it's a federal or private student loan. So yes, there's a bunch of different suggestions for that. Credit card debt is, in my thinking, that it is a little bit easier, because student loan can be a little bit more difficult. It just seems like it goes on for a long time. But yes, so I think credit card debt is a little bit easier, but there are definitely some suggestions. I would love to be able to help with that if I had some more specifics, for sure. Any other questions? Okay, I'm gonna turn it back to Daisy. But thank you all so much.
Thank you, Kennedy. I did have a little question. Sometimes we make late payments on things. I know recently, like a few months ago, I just totally spaced and I made a late payment, and then I just messaged, I used the online messenger for my provider. And they were like, oh yeah, we'll refund the late fee.
That's awesome.
Yeah, so like, I think sometimes we think, oh, they're never gonna, they're just gonna say no. But I think maybe we shouldn't be scared to message the credit card companies and kind of like just reach out. Especially now, I feel like with COVID, some credit cards are being a bit more lenient.
That's 100% true. So you are also, another fact, you are able to change your payment due date. And if you are financially stable enough to put on automatic payments, I definitely suggest that so we don't forget, because paying on time is a huge piece of that pie chart that I talked about. So, but yes, they're very forgiving. You just have to call them and wait on hold and talk to their customer service representatives. Just remember, they're there to help you. You're their customer. And so let them know that you are trying to stay loyal to them. And it's very important, and they'll kind of understand that. So they're working for you.
Okay. And then I don't know if you saw this question, but Denise had asked, have you ever had clients with so much debt that they filed bankruptcy?
Yes, I do. Actually, I have a few clients who have just paid off their bankruptcy attorneys and have had that. I've been through the whole process. Yes. I've helped a lot of clients be able to fill out the bankruptcy paperwork, understand if they want to file for bankruptcy. So yes, that is something I've done before and am pretty knowledgeable about, and can be very helpful with that one. So.
Alrighty, thank you. If anyone else has any more questions, type them into the chat. I did want to take a moment to share my screen. Kennedy, if you could stop sharing your screen real quick.
Yes, of course.
All right. Desktop. Okay. So if you guys ever want to learn more about the Dallas Library's resources, you just go to our website, dallaslibrary.org, click Job Resources here, and we're always going to have information about our upcoming presentations here at the top, as well as how to reach us. If you'd like to sign up for our newsletter, just sign up here. And then we also have job leads and some employment resources as well. Job boards, job listings, some resume help, some of our resources, and some online skill building websites as well. Some books. And then our next, our recorded events are also here. If you would like to see any, like this presentation will be up probably by tomorrow. So if you missed anything, it will be recorded and we'll send it out in an email as well. That's not the one I wanted. Sorry. Okay. And then for our events, you can check our calendar and we'll always have our events up there. So our next Job Seekers Club is February 4th. with Fresh Start. They're from the city of Dallas. They're going to be talking about their employment program and how they help people who have criminal backgrounds get employment within the city of Dallas. So if I'm interested, I also wanted to highlight our new series, our professional development series. We're going to be doing in-demand soft skills. So Job Seekers Club is twice a month, and we always have a different presenter, different presentation. It's a little bit more casual. Our professional development series is going to focus in on specific things. And on this one, for the first one, it'll be February 24th, and it's going to be effective communication. It's going to be hosted by Christine Horseman. She is our career coach. Some of you might remember her from previous job seeker programs. So it's going to be 3 sessions, and it's once a month. So if you'd like to sign up for that, I'll send the link into the chat. Okay. Any other questions for today about the library or Jewish Family Service? Okay. It's going to be the last call. All right. Well, if nobody else has any questions or anything else for today, we're going to send the recording out after probably later today. We're going to send it to your email if you signed up. And if not, it's going to be on our YouTube channel, on the Dallas Library's YouTube channel. Check out our website, sign up for our newsletter. We send a newsletter every week with resources, local events, online job fairs, anything like that. And okay. Thank you, Denise. So I will see everybody in February. And I guess that is it for today. We're going to go ahead and end a little early. And I'd just like to thank Kennedy and Jewish Family Service. You guys are awesome. Thank you for this awesome presentation and these really, really helpful resources.
Thank you so much. Have a great day, everyone.
All right, you guys have a great day.